With a lot of downside volatility in both stocks and bonds to start the year, I thought it'd be an excellent opportunity to revisit a tax planning strategy called tax loss harvesting. If you've never heard of tax loss harvesting, or maybe you have but you're not really sure how it works, this video is for you. So, tax loss harvesting is the idea of taking losses that we might have in our portfolio and trying to use those to reap some tax benefits. Because remember, from a tax standpoint, losses, deductions, those things are actually tax assets that can actually provide us some benefit on our income tax return. So how do we do that? Well, before we dive into an example, I do want to point out that this would not apply to your retirement accounts. So by that I mean tax loss harvesting wouldn't be applicable to your traditional IRAs, your Roth IRAs, your 401ks. All that stuff is tax deferred, or in the case of the Roth, it's tax free. All right, so what we're really after here is your brokerage type accounts. Maybe you have a brokerage account in your name, maybe a joint account with you and your spouse. Maybe you have a revocable trust account or a family trust. All of those types of things are areas where tax loss harvesting would apply. And the idea is pretty straightforward. Let's just say you own XYZ mutual fund and you currently have a $20,000 loss in that fund. You could go in and sell that and recognize that loss. Okay, so now for tax purposes, we have a $20,000 capital loss we can take on our tax return. Okay, and how it gets used on the tax return may vary from person to person. Okay, because what ends up happening is when that $20,000 loss gets reported on your return, the IRS will allow you to take capital losses against other capital gains. Okay, so you have $20,000 of capital gains somewhere else, you can net the two. Okay, so you don't have to pay taxes on the other $20,000 of gains. All right, so this can be very effective in certain situations. Maybe you have a highly appreciated position you've held for a really long time. Maybe you have some low basis stock, and maybe you've got some other investments that have some losses, and you've been trying to find ways to reduce this position over time, but have never really wanted to pay the taxes. Well, this could be a great time to match some of that up to start to reduce some of that position. Similarly, if you sold a rental property this year, you might have a capital gain on that this capital loss could help offset some of that. Maybe you sold a business this year, and some of this capital loss could help to offset some of the income from that. Okay, so there's different ways this could be used. But if you don't have any other capital gain income, there's still a benefit, okay? Because even though you don't have any other gains, the IRS will allow you to take $3,000 of a capital loss every year and bring it over and apply that against your other income items. So this is things like your wages, your pensions, your IRAs, your taxable Social Security, interest income from the bank, anything that might be hitting your return. Okay, and essentially what would happen is if you got $100,000 worth of wages, all right, you could use $3,000 of the capital loss against that. So you only pay taxes on the 97. All right, and now of the $20,000 that we recognized, we used 3, and we've got $17,000 that we haven't used. Well, the IRS will let you carry that over to the next year, and it doesn't expire. So there's generally an incentive to accelerate it, get it on the books, since there's really no risk of losing it, and that makes sure that we can use it at the earliest opportunity. So next year you might, have $10,000 of capital gains. Well, guess what? You got $17,000 of losses carrying over, so that's going to wipe out the 10. You won't have to pay taxes on that. You're still going to have $7,000 of losses left. They'll let you take another $3,000 that year against your ordinary income items, and now you've got $4,000 of losses still carrying forward to the next year. So you can see where this would provide you some reduction in your taxes. How it might get used, again, probably varies from person to person, but the general idea is that there's generally a benefit to accelerate that to the extent that you can. The last thing I wanted to cover on this, it's very, very important, is if you're undertaking this, you want to be very careful to avoid the wash sale rule. The wash sale rule is the IRS basically saying, hey, if you sell something just to take a tax loss, you can't buy that thing back for 30 days, okay? So just to be very clear, if you're selling Apple, okay, you have to wait 30 days to buy Apple back. Otherwise, the IRS is going to disallow the loss that you booked, right? So again, same thing in a mutual fund, whatever. So it's not that you can't buy anything, you just can't buy that exact thing. So what I've seen people do is if the position is something that you want to continue to hold, okay, then what you would do is you would sell that position, book the loss, you would be out of it for 30 days. You could buy something similar. So if you owned XYZ mutual fund, maybe you buy ABC mutual fund that's very, very similar, and you're in that for 30 days. After the 30-day period expires, you can sell that and go back into XYZ, the one you love the most. And now you're back to your original position. You booked the tax loss and all your bases are covered. If you're not looking to maintain that original position, then it's very, very simple. You just sell it and you move on to something else. But this is really important to consider. You don't want to just book the loss, buy the same thing back, because that will nullify the whole exercise. So in the end, think about the people who are looking for these opportunities versus the people who aren't, okay? Saving a few $1,000s here in taxes. Obviously, the higher your tax rate, the bigger the benefits from these types of strategies will be. But we should always be looking for these things. It's a lot of time. It's like anything else. It's a game of inches, right? So look for these opportunities when they're there. Certainly, if you need any help, you're always welcome to give us a call. Thank you. Have a great day.